Now, first off, does everything look okay?
Yeah, I can see
Okay.
your PowerPoint. Yeah,
This is, can you see me?
I can see you too.
Okay. All right. Well, hello. My name is Kevin Jeffries. I teach government here, or at least I try to, assuming that there's uh, mm, a meeting point, let's say, between us, me, and the students, because of course, as a lot of you all know, when you're teaching classes that are required, like mine, you get this big so what? Okay, why am I taking this sort of thing? Now, this is also something I would get sometimes from grad school as well. I went through a program that wanted everybody to do all these highfalutin presentations and be prepared for the person who's going to come in and ask you, so what? Why am I listening to this? Why am I trying to learn this? So this is not an unreasonable ask on the part of students. In my case, the answer is relatively easy to respond to. I can simply say it's required, which is okay in a sense because it fits into my subject matter. It's required by the government of the state of Texas. Alvin Community College is a single purpose governing district. When I'm teaching dual credit, I also point out that the other side of the coin is the independent school district. That's also created by the state of Texas for the purpose of educating students so they can go off and earn money for their employers at some point, be part of the labor market. This is part of what we discuss. So ideally that helps, but in addition to that, it should just make the rest of the world a little bit more sensible to individuals. And that's a lot of what I'm going to try to do right here, is to assist with that. Now, I know we all have different sorts of pet peeves, and this is one of them. You get these sent around every once in a while from in different, different formats. The basic meme here: why am I paying taxes on my wages, then paying sales taxes to spend my money, then paying income taxes on the money they've already taxed, and paying property taxes after already paid sales taxes on said property? Exclamation point. And I, admire their restraint. It's just one exclamation point. But the reasons for this, the way that I originally had this was you don't want to send things like this that demonstrate that you really don't know what's going on or the basic, structure of a governing system, because there's a simple one word answer to that question is that's the fact that we live in a federal system. We have a national system, we have a state system, we have local systems, and again, what we are is part of that local structure. And a lot of folks aren't aware of that, even individuals who have been educated. And now I think part of the reason is because when we approach a lot of things, we approach them in a very abstract way. And what I'm going to try to discuss over this is the more concrete way I think that you can approach some of the material that we're covering here. And one of the best ways you can do that, I think, is simply look at Paycheck Stub. And this should look familiar with you. I had a volunteer that'll let me take a picture of this, and you'll notice that, I black some things out here: total hours, gross earnings, total hours worked, and all of that. But you see, Social Security pulled out $50, Medicare pulled out $11, federal income tax $30, almost $31 right here, total of 92 from this particular paycheck. And I don't see, I removed the amount of the particular check right here. Now, that right there is a concrete illustration of something that we generally talk about in an abstract way that I think is a little bit more difficult to process. Now, there's another thing too. This is, by the way, these are all things I'm going to illustrate more as we go forward. This is a receipt, obviously, Brass's bookstore. There was a $50 purchase subtotal. Then you got this thing called a sales tax, 8.25%. I got a cat going. Am I right? Which added $4.13 to this. And so what's that all about? Here's some more money that's being pulled out. Here we've got also, if you own property, you've probably seen something like this. This is from Harris County. That is the property taxes that you pay to the different local governments. You got Houston Independent School District, Harris County Flood Control District, Port of Houston Authority, Harris County Hospital District, excuse me, Harris County Department of Education, Houston Community College System, City of Houston, tax rates. I don't have the absolute taxes right over here, but homestead exemption up here where you would see the appraised value. I decided to go ahead and keep that removed. Now, in my experience, abstract concepts are less relevant to students and all of us than concrete examples of those concepts. So those are three concrete examples of those concepts. I'll offer more in just a bit. Now, here's an example of an abstract approach to, and I'm going to focus this on, the U.S. budget. And I love this presentation of the information here. And I know it's kind of tiny for you right here, but let me try to make a little bit of sense of it. And we're going to keep coming back to this several times. One of the things that I try to do as well when providing information is hit it again. Repetition, I think, is very helpful for some basic stuff like this. Now, this is the fiscal year 2022, the United States federal budget, fiscal year 2022. The fiscal year goes from, let's say it's, this would have started October 1st, 2021, and then would have ended in September of 2022. These are revenues, where all the money's coming from, and there's a circle that relates to that in comparison to the outlays over here. Now here, this is very tiny right here, but you'll see a larger version of this just in a second. Individual income taxes, payroll taxes, corporate income taxes, and the others, all, excise taxes and things like that. Now, where does that money go? Now, this goes into a treasury. It's eventually pulled out, and then it's spent in different ways. Mandatory spending, the law says it has to be spent. Discretionary spending, the law does not. You can cut all of this stuff if you want to. You can't cut this stuff, just at will. You'd have to change the law to allow you to do it, which is a little bit more difficult to do. You have net interest right here. One thing, and this is my big complaint, we're going to come back to this as well too. You don't have anything that describes where the funds come that allows all of this stuff to in fact actually be spent. Now, this is where we're probably familiar with the concept of deficits and debts and things like that. These are treasury bonds, largely the sale of treasury bonds that allow for that. But again, more on that as we go forward. And again, this is the type of information that people will hear on a regular basis and maybe not necessarily understand what it means and how they're involved in this. Now, that's an abstract way to approach this, but here are some concrete questions. How do funds go into the Treasury? Where do they come from? How are funds drawn from the Treasury? Where do they go? Now, this is not what the Treasury looks like. I have kids that think that, well, this is what you should be able to do. If you put money in the bank, one of the things you ought to be able to do is go to the bank and jump into your money. I convinced them that, that's probably not really the best way to think about it, though people do. I do. It's actually really a process that is circular in nature. Let's start over here. Taxes. You pay taxes. I'll start right here. You pay taxes in different ways, and I just mentioned, right? Money that's pulled for income tax, Social Security, Medicare, the payroll taxes, money that you pay as sales taxes, money that you pay in property taxes, again, to fund at different levels of government. Taxes deposited in the appropriate fund in the appropriate treasury. The United States Treasury, the state treasury, the treasury of Brazoria County, city of Alvin. Funds are appropriated in a manner authorized by the legislature. That could be Congress, that could be the Texas legislature. It can be the county commissioners in Brazoria County. It can be the city council of Alvin. It could be the board of trustees of Alvin Community College or the board of trustees of Alvin Independent School District or Pearland Independent School District, spent accordingly. By the way, that includes us. So some of the funds, obviously, that's pulled, that go to Alvin Community College ends up in our pocket. And then, of course, we're buying things or doing whatever, and we're paying taxes, and we just keep going around and around and around and around. It's an ongoing process. So how do these abstract concepts impact students in a material way, and how might this help make them make more sense of the subject matter here? Now, let's go back here, a little bit more of a zooming in on the individual of the total revenue. And so we can see from 2022, $2.6 trillion collected in individual income taxes, 10.5% of gross domestic product. Payroll taxes, $1.5 trillion collected from everyone's paycheck. 5.9% of gross domestic product. Here's the stuff for the corporate income taxes and also the others. Let's not worry about that here, but that's certainly part of the mix. Now, that's the more abstract approach. But again, coming back to our paycheck, we can look at this. Now, I'm using this paycheck because obviously with Alvin, we're not paying into Social Security. We got these alternative retirement programs. And so let's not worry so much about this. This is most of what other folks, students, for example, are going to see. And again, we got the federal income tax. Let me use this. Is that the laser? No, this is the laser. I'm loving this. And it just comes and goes. Yeah. Learning so much about this teams. So you got your federal income tax, you got your Social Security, you got your Medicare. All right. Recipients are making two types of contributions to the federal treasury. And this is what I'll tell them when we get to payday. It's like, you just made some contributions to the treasury. How did you do it? Well, you didn't. You got the job. It was like whoever's in charge of payroll, where you work, who's actually doing this, making sure that, your money is pulled for Social Security, go into the Social Security Trust Fund, go into the trust fund with Medicare. And then, of course, you've also got the federal income tax, as we saw just a second ago in that paycheck stuff. Now, there's a third one. I mentioned this issue with Treasury bonds. What's interesting about the Treasury bond is this also provides an investment opportunity for people, because that's effectively what that is. This is how we fund when we're talking about deficits and debts and things like this. This is how that stuff is funded. People purchase these things because the United States Treasury, I mean, we like to, complain about these sorts of things, but in a very pragmatic way, it's about the safest place historically to put your money. Now, somebody might want to come in, well, what about the looming zombie attacks or whatever? Well, that's, all bets are off when that happens. But otherwise, what you have then is an opportunity to stash your money for a period of time. You're not going to make a lot of money, but the more important thing is you're not going to lose a lot of money either. Here's a little bit of a description. Let's not worry so much about this right here. But the thing that I like to point out, what this means is that when we talk about tax day, every payday, is tax day. So we normally think of April 15th as being tax day, but it's not. It's tax reconciliation day. Now that's coming up. It's one of the things I like to bring up in class because, students, have to, those that are working, and most of them do work, have to deal with this. So tax reconciliation day, at least as far as the income tax is concerned, because your payroll taxes are more or less set. Did you pay too much or did you pay too little? And again, we know how we find that sort of thing out. By the way, what I put up here is background information. Why is it that the national government is allowed to pull federal income taxes? It wasn't part of the original scheme. The constitutional order, 16th Amendment, about 100 years ago, authorized that. Texas voters, by the way, have approved amendments, most recently in regards to a wealth tax 3-4 months ago, to not be able to impose an income tax, a state income tax. Now, that's not completely true because we could go back and change the Constitution, but that's very unlikely. What allows for the collection of the payroll taxes? Well, the Social Security Act of 1935 allowed that. Social Security amendments of 1965 expanded this to include Medicare and Medicaid. Now, both of these, especially this one, were challenged. The Supreme Court ultimately came in and says the general welfare function that's mentioned in the United States Constitution does cover the collection of taxes for insurance purposes. And I'm going to describe that in just a bit. Old age insurance, medical insurance. Now, how much do you owe in income taxes? Again, we pay it on a regular basis. Now, notice it's our responsibility to find that out. Some people say, well, the national government ought to tell you that. It sort of does. But when you fill out your 1040, which we're going to look at in a second, this again provides people the opportunity to be able to, figure out what the appropriate deductions are and whatnot, and do whatever tricks you're smart enough to be able to do to minimize it. So how do you do this? Now, again, we know this. We're in the process of getting our W-2s. Maybe you qualify for some 1099s. We got the 1040 form that we fill out if if things are simple for you. then you have to figure out, well, you don't really have to figure this stuff out. You will get a tax rate that fits within the margins. We'll talk about this in just a second, and tax deductions that you can take. And again, all of these are political things, especially these two, the marginal tax rates, because, people like to scream and yell about how much you're taxed, sometimes without really understanding how that particular marginal tax rate impacts you or doesn't. And the same sort of thing with tax deductions. And again, this provides an opportunity to look at this thing here, the W-2. Again, you might get this from different places, depending upon how many places you're employed. It might be more than one. And again, you might very well be, let's say some of us are offered from time to time the ability to review a textbook. We don't work for McGraw-Hill or whoever it was, but, we get a little bit of money and they come in and they say, okay, this is what you earned. And you add this, or at least you're supposed to add this to what you are claiming for your total income. So that's what that's for. And again, we're familiar with this too, probably, well, very familiar. And of course, we're going to refamiliarize ourselves with this too. And again, sometimes we just fill this thing out without necessarily understanding what all is associated with this. Students especially, since this is kind of new. So what are you effectively doing right here? You're reporting all your wages, adding up all those W-2s or 1099s or whatever. And then you got opportunities to come in and file for different sorts of deductions. That's what this is basically about. So sometimes we'll bring these things out and we'll, say, okay, what does it take to, pass this particular thing or, fill it out? What's there? Why do certain deductions exist or not? Now, again, here are those marginal tax rates I mentioned a second ago. And it's a very important thing to understand. It's a step system. And this applies to everybody. The first $0 to $10,275 you earn is taxed at a 10% rate. Beyond 10%, $10,276 to $41,775. It's at 12%. Now, if you only make 40,000, then you don't pay anything higher than that in terms of a percentage. If you make more than $41,775, everything beyond that is going to be taxed at 22% until you hit $89,000. And again, if you only make $85,000, you don't pay more than 22%, and that 22% is only going to apply to that 40,000 and change or whatever in this period. Beyond that, if you make more than 170,000, you're going to pay 32. Less than that to 89,000, 24%. Some time ago, people were talking about screaming about the 37% tax rate, and not too many people really are paid every year over $539,900. And even then, those folks don't pay 37% on anything until it's above $539,900. So if you make $550,000, you're only paying 37% on that last 11% or $11,100, whatever that actually ends up being. So that clarifies the issue of tax rates here. Then you got these issues of deductions. I'm not going to read through this except to point out, and this is some stuff from the Internal Revenue Service. As a side note, by the way, one of the things I try to encourage students to do, what we're dealing with right here, I mean, it's the greatest information acquisition device ever. It's one of the reasons I struggle with whether or not I actually want students to not have their devices with them. I'd rather them not, surf Amazon or TikTok or whatever. But a lot of times I'll say, okay, well, look this up. Try to find out what's going on here and there. Use this device for something other than cat videos, even though it's more fun to look at cat videos. So you can find things like this. During tax filing season, all taxpayers must decide whether to claim the standard deduction. If I go back to here, we can see the standard deductions, and it varies depending upon, if you're married, single, whatever, or itemize their deductions. When we talk about itemized deductions, I mean, this is just a partial list: capital gains, child tax credit, gambling losses, mortgage interest deduction, state and local tax deduction for places where you're paying a state income tax or local income tax, charitable contributions deduction, student loan interest, which might be interesting to students, work-related educational expenses also for us, earned income tax credit. Some students probably take advantage of that as well too. And again, these might be things they're interested in taking advantage of as a consequence of how this affects them. And again, presumably, the more they understand how things affect them, the more they are going to be interested in learning this stuff. Now, where does this money go? Again, it doesn't go there. It goes into the Treasury's general fund. And again, here's where we're talking about income taxes. And there's a little bit, things start getting more and more complicated the more you kind of run into it. But let's not worry about that here, though I will complicate things in a bit. Not too much. The general fund, America's checkbook. The general fund of the government consists of assets and liabilities used to finance the daily and long-term operations of the U.S. government as a whole. It includes accounts used in management of the budget of the U.S. Government. I think this comes from the Treasury Department, if I recall. So that's what the general fund basically is. And as we'll see as we start getting into Texas, the general fund has within it, the Treasury has a bunch of different funds. In Texas, it's like 400 funds for different purposes. Some of them we're going to discuss in just a bit. But the general fund can be a little bit flexible. Now, this is enough for the income tax. Let's talk about the payroll taxes, where this issue of funds is going to be a little bit more pertinent. Now, again, so here is your federal income tax right here. Here you got your Social Security, and here you got your Medicare. And these aren't insurance programs. So when we think about those things, we need to think about them in a business sense in terms of insurance, where, of course, people are pooling their resources with the idea that, some people are going to need it and some people aren't. And one of the things I'll mention when we talk about Social Security, and we'll touch on this in a bit, when you retire, you qualify for a size of a check. That's it. It's not a whole lump sum that you get a monthly check. Now, how much in total are you going to get? The simple answer is, well, that depends on how long you live. If you get one check, let's say it was $1,500, well, that's how much you got. Now, of course, that is going to make it a little bit more, more funds available for other individuals that are going to live to be 90, 95, or 100 or whatever. What is insurance? Let's remind us what that is. It's a contract represented by a policy in which a policyholder receives financial protection or reimbursements against losses from an insurance company. In this case, the insurance company is the national government. The company pools clients' risks to make payments more affordable for the insured. Most people have some insurance for their car, their house, their health care, their life, their retirement in this case, and for healthcare once they get to a particular age. Now, why is the national government running these programs? This gets us into how I like to talk about public policy and why governments do certain things as opposed to the private sector. Think about Alvin Community College. We are a government. And again, what do? Well, we provide education for individuals who really don't have enough money to go to, a private institution that could charge you $25,000, $30,000 a year. We charge far less, $2,500, $3,000, something like that, in basic tuition and fees. Why? Well, because the other money is coming elsewhere. We're being subsidized in different ways. It's the same kind of thing here. The private sector isn't doing it. And this is something economists like to get into, is the government crowding the private sector out of something? If the private sector could make money doing this, they would do it. Now, why is there no profit in it? Well, especially when you're talking about benefits that go to poor folks. Well, you don't make money providing benefits for poor folks. So if it's going to be done, the resources are pooled. In the case of older folks, with either retirement or for medical assistance, there's not necessarily an awful lot of money in that. All right, so this helps explain why these things were eventually passed into law, but that takes us into a different direction, though it does put it in context. So it's one of the reasons why I think it's appropriate to talk about it this way. So Social Security, Federal Old Age Survivors and Disability Program, Medicare, government national health insurance program, primarily providing health insurance for Americans age 65 and older, but also for some younger people with disability status. Some of y'all are probably thinking, well, what about, got this thing called Medicaid also. Now, that's a separate sort of thing. We're going to talk about that in just a second. But that is more from the income tax. If you're poor, because that's what Medicaid is, health insurance for poor folks, you're not in a position to be able to, suck money away for it over the course of your working life. Maybe you're not working, or maybe you have a disability or something. So this is why this is something that's a little bit is provided for you. The premise of Social Security and Medicare is that you pay into them during your working years in order to qualify to withdraw these funds after retiring or under certain medical circumstances. And the reality is, this is an interesting thing to approach. The employee pays, we do 7.65% total. 6.2% for Social Security, 1.45% for Medicare, and it is matched by our employer. Maybe you've noticed that if you kind of like follow, you're working for ACC, you're paying into, I pay into VALIC, optional ORP, and so as part of what's in there is stuff that ACC's pumped into, which is, actually, I think kind of cool. Where does this money go? Now, this goes to the Treasury, yeah, but in this case, a particular fund within the Treasury. The Social Security Trust Fund, the Medicaid Trust Funds, these are dedicated funds. And again, the income tax goes into the general fund. This goes into a particular trust fund. Now, again, how does this fit into the big picture? So again, talking a little bit about specifics right here, then we can pull back and we can talk a little bit about this in the abstract. Let's remember again, because we focused in on total revenues just a second ago. That little bit right there says individual income taxes. That little bit says payroll taxes, and that says corporate income. Let's not worry about that. Now here, when we're thinking about where the money goes, this is the spending part of it. The mandatory spending, that I promise you, and we're going to zoom in on this in just a second, that says Social Security, that says Medicare, that says Medicaid. This is discretionary stuff. Now, let's talk a bit about the difference between that. Now, here, let me do this real quick. I think this is an appropriate little bit of a side note. This is 2022. And if we look at this is 2020. And this is a great way for understanding when you say mandatory spending, and a lot of times the spending is tied into not a decision by Congress to pass to spend a particular amount of money. It's what people qualify for. Now, if we look down here, and I know it's tiny, unemployment compensation was huge in 2020. Recovery rebates, paycheck protection program. What on earth is that? Well, we know what that's about. This was a consequence of the pandemic, of the shutdown. Look right here, revenues. $3.4 trillion. Right here it says individual income taxes, $1.6 trillion. That sounds like a lot of money, but if we go back and look at 2022, and again, I promise you, this is, I think can I increase this? Yeah, let me, sorry, hold on. So I didn't want to do it because start screwing things up. Oh, and this isn't also, this is a little pixelated. My apologies. That says 2.6 trillion. All right. So in 2022 fiscal year, we get $2.6 trillion in income taxes, whereas 2 years before, 1.6 trillion. What's the difference? Why is there $1 trillion less in income taxes collected in 2020 than in 2022? Because of so many people that weren't working. And also those people that weren't working were collecting unemployment. So look at this, $6.6 trillion in outlays, $3.4 trillion in revenues. That's a $3 trillion deficit right there. Funded again with these treasury bonds. That's a different subject though, but I like to bring that sort of thing up here. All right, to fit a bit more with what I'm trying to cover, the mandatory spending. So we got Social Security, we got Medicare, we got Medicaid. All right, so now this is about the time to, I encourage people to bring stuff out or whatever. Social Security, $1.2 trillion, Medicare, $747 billion, Medicaid, 592. I think that's what that says anyway. Again, mandatory. Why? Because the law says so. Discretionary, and you'll notice that defense is discretionary. Non-defense is discretionary as well, too. And this gets into some areas that include us that we'll talk about. In other words, all of this could potentially be terminated. Now, difficult to do when you're talking about something like defense, and it's difficult in general. A lot of people point out, well, the ones who are really into balancing budgets. Well, how do you do that? Well, you have to change law over here. Now, notice, by the way, too, in terms of how this can connect to students, you've got student loan programs. Now, this is quite large, and right here it explains that the reason is because some of the student loan forgiveness was contained right here. And that helps explain why it's especially large right here. But obviously, student loans, that's something students are familiar with. And again, a concrete way to try to understand what's going on here in a more abstract way. Now backing up a little bit. Here it says outlays. In the Constitution, it talks about this thing called appropriations. It allows for the legislature to come in and secure the treasury from the executive. The executive is always going to want to be pulling money out, but the legislature is supposed to protect it. And money can't be drawn unless the legislature says okay. And the laws that the Constitution calls this process the appropriations process. Our money can't be drawn from the Treasury unless with appropriations from Congress. Mandatory. We just talked about those. Discretionary, and also mentioned the Treasury bonds. And again, in brackets right here because it doesn't say anything there, but it's very much important to understand that. And also the fact that these are investment opportunities. I've got some links in different places where I'm like, okay, yeah, you want to you got some money away. I don't know, grandpa died and gave you a little bit of cash, and you don't want to spend it. You want to sock it away somewhere. Well, buy Treasury bonds that have a particular sort of yield in 10 years or something like that. It's going to be there in 10 years. Again, unless there's a zombie attack. Mandatory spending. Again, we just talked about the Social Security. So they can, again, see ideally how this connects to their day-to-day welfare. Medicare, Medicaid, insurance, income security programs, student loan programs. Now, I mentioned those because those are part of the big chunks of mandatory spending we just saw in that graph. Medicaid goes to the states, goes to Texas for expenditures by the state. Income security programs, welfare, goes to Texas for expenditures based on whatever rules the state of Texas wants to come from. Student loan programs, this involves us, grants and all of that. Now, relevant terminology. Again, like I said, a lot of what I like to do with things like this is to make sure that students understand when they hear these different sorts of terms that are out there, right? Getting back to the whole so what thing. You hear people talk about entitlements, about means tested programs. And a lot of times when people use entitlements, they use it in a negative way. Well, that's what we mean by saying that you paid into something and you're entitled to getting a return. Why? Because this is what the rules said when you first got into it. Unemployment insurance, Medicaid, Medicare. And of course, you have to be means tested. That's to be determined whether or not you're eligible for that assistance. And students know this. They don't know they've been means tested, but when they filled out their FAFSA here, they've all done this sort of thing, I'm sure. I don't really, we talk about it sometimes a little bit in class, but not an awful lot. But this is another way that, again, a concrete example of the stuff that we're talking about. Free application for federal student aid. And the results, that's a mean tested result to try to figure out whether you qualify for funds. And if you're qualified for funds, you're entitled to receive them. That's what it means to say an entitlement. Same sort of thing with Social Security benefits, Medicare benefits. In order to save time, I'm not going to click on some of these things, but I like to do that. What qualifies you for the amount of funds that you receive when you become eligible? This is all laid out. Now, again, getting back to this, so we can kind of understand Social Security, Medicare, Medicaid, income security, student loan programs, these others, veterans benefits, military retirement benefits, other sorts of things too. Now, we've also got the discretionary programs as well too, which I want to start to get into. By the way, just to help them, someday you want to apply for Social Security. I'm at the age where I kind of like, do I want to do it or not? It's good to talk to a financial advisor, as some of us know, to try to figure out what's appropriate. You do it 62, 65, whatever, 71. And this thing with Medicare benefits too, that kick in at 65. How do you in fact actually do it? You paid into it. So since you paid into it, you deserve it. Now, how about this discretionary spending? And how does that impact students as well too? Defense spending, a lot of students are have a military background. So some of the defense spending will go to that. Or let's say they had a background in it. Maybe I've had students occasionally that are older. They're retired. They got a nice little pension coming from the Navy or the Army or whatever. Transportation, highways, housing assistance, education. We get a little bit of that. We're going to actually talk about an example before I wrap everything up. At the independent school districts, there's a lot of federal funds that come to there for reduced student lunches, for free student lunches. So that's where that money goes. Workforce development, agricultural assistance, all sorts of things that, end up in people's pockets here and some of it, federal, flows through the state of Texas. And this is where I'm kind of making a little bit of a shift right now. It's not so much talking about things that are directly on the national level, but let's say national to the state, state to local governments. And about 30% of what we get in the state of Texas, the revenue, the largest source of revenue is federal funds. Now, how does this work? Now, I'll show you one of my favorite places to go for information here. And this is the kind of thing I get really excited about. Next month, the new fiscal size up is going to come out. If y'all are old enough and you remember when we used to get telephone books, you know, as a child, you're all very excited to say, we're in the telephone book. This is great. Fiscal size up. Now, what this thing does is it explains with detail the nature of the fiscal reality, you know, the collection of revenue, the expenditures and whatnot, authorized by the legislature in the current legislature. Well, the one that met last year passed an appropriations bill, and this is a description of what is in that appropriations bill. And one of the things we see, now this is the one from the 87th legislature. This was passed in 2021. So these numbers are from that 2-year period. And if you're familiar, and you should be, by the way, if you have an understanding about Texas government, one of the things you need to know is it's a 2-year budget because the legislature meets every other year. Helps explain a lot of things. So this is a description of the federal funds that were received, $98 billion. Hold on a second. $Billion. 531.6 billion dollars over the 2-year period that began September 1st, 2021 and ended August 31st of 2023. Where did that go? Well, half of it went to Health and Human Services. Why? Well, because that's where Medicaid is distributed. Medicaid funds, federal Medicaid funds are distributed, and that's where most of that is. So 51% of all of this goes to Health and Human Services. 14%, the second largest area of expenditures of federal funds, business and economic development. As we're going to see in a second, it's mostly highway construction, Texas Department of Transportation. Some people might be working for Texas Department of Transportation, or maybe you're familiar with some of the highways that they build. I don't know if you drive cars. I don't know if you drive on highways, things like that. I don't know if you're familiar with highways or highway construction. That's where the money is coming from. And again, we're going to talk a little bit more about the nature of that as well, too. Here's education. You know, you can see where it's spent some places and not others. No reason to get too much into it here, but I do want to focus on the chapter that focuses on business and economic development. And it points out 5 different areas. We'll point on that in just a second. Now here, method of finance. Again, you know, looking at finance as a way to kind of get a little bit more specific in terms of the environment, the governing environment we live in. And keep in mind, if you're working for Alvin Community College, you are in a governing environment. That's where your money is coming from, for government workers. General revenue funds, we'll discuss in just a second. It's not that much. This is actually mostly sales taxes, which we'll talk about in a second. Some of these sales taxes are dedicated for particular purposes. Here's the federal funds, that almost $14 billion we just talked about a second ago. And the other funds. Now, this kind of makes sense in terms of the other funds, these other sources. When we think about what these things are, look at the Lottery Commission, that's there. Housing and Community Affairs, this is sort of like, you know, where public housing and whatnot is built by the state with funds it gets from the national government. Texas Lottery Commission, where do you think they get their money? You go out there and you start buying your lottery tickets and whatnot, there you go, right? And other places as well, too, but primarily it finances itself. Department of Motor Vehicles, you know, you get your, your registration and whatnot. It's not an awful lot of money, $307 million over a 2-year period of time. And I say not a lot because, again, you know, what do we have? 20 million at least automobiles of some sort, probably much more in the state of Texas. Notice the Department of Transportation is where most of this goes. Where does that come from? In a second, we're going to look at gasoline taxes. So we kind of fund this. You know, you go out there, as we're going to see in just a second, you're pumping gas into your tank. Some of that money goes to the state. Some of that money goes to the national government. Texas Workforce Commission, ACC gets a bunch of this, and I'll point out some things that have been published recently. National funds go into the state of Texas and the places like ACC. Why? Well, because we do Workforce Commission stuff, right? You know, in addition to the basic academic stuff that's happening, you know, you see people that are studying different sorts of careers, occupations. All right, what did I have back here? Sorry. All right, so yeah, more on TxDOT, the Texas Department of Transportation, the Texas Workforce Commission in just a bit. It'll be some of the final stuff that we talk about before I shut up, which is going to be pretty soon. All right, so what's not paid in income and payroll taxes? What do you do with the rest of your check? Now, this money right here, right? Where you're going to go out there and you're going to party or buy a book in this case. This gets to that receipt that we talked about before. And the sales tax, what is that thing? That is your contribution to the treasury of the state of Texas and also the treasury of the city and the county where you bought all this stuff. What is the sales tax? A tax paid to a governing body for the sale of certain goods and services. Usually laws allow the seller to collect funds for the tax from the consumer at the point of purchase, meaning where you bought that thing. Brazos bookstore or convenience store, whatever it is, you get yourself some tacos, and you also pay a little bit of sales tax on it. Second largest source of revenue in the state of Texas. Now, one of the things I thought about doing when I first put this together was taking, and I have a bunch of these pictures of, you know, just like the sea, this wall of permits that you see, and trying to figure out what's going on here. Because again, you know, I mentioned this is all couched in this idea of federalism. You got national stuff and state stuff and local stuff. Well, there's a lot of local stuff here. This is my local kolache shop. And you got, and it's in Houston, it's in the Heights, sign operating permit, health department food dealers permit, health department fats, oils, and grease generators registration certificate. I did not know there was such a thing. Food handler training courses. I do have to say something that I'm a little uncomfortable with the idea of a food handler, someone handling your food. City of Houston combustible waste storage permit. We don't want waste to start catching fire. Or let's say permitted, so you know how to deal with it or make it less likely this actually happens. Food manager certification training program, certificate of occupancy, and usually that's the fire department, making sure that not too many people are going to get burned alive if it catches fire. For our purposes, the Texas Sales and Land Use Permit right here, which allows them to collect those taxes. That's what's lying there. And somebody wants to get into business at some point, this is one of the things you're going to have to get. And it's not just that you're selling physical things, you're also allowing individuals to use property. Let's say that you're leasing something, right? Or you're renting a space for a period of time. You're not buying a thing, you're using a thing, and you're taxed on that as well, too. Sorry, this is, we're not going to watch through this, but this shows you that if you get on the comptroller's site, which is kind of like the treasurer of the state of Texas, the tax collector of the state of Texas. There's a whole thing here for a video for people who collect this to figure out how to, in fact, actually do it. You're collecting the sales taxes. You're not supposed to sit on it. You're supposed to send it on to the state of Texas. And here's a little bit more information about how that works. Here's also another wall of permits from one of the places, convenience stores on Highway 6 I like to go to. Now, the other place is a kolache place. This place also, you need a permit for e-cigarettes. Cigarettes, cigars, tobacco products, food, more food handling, alcoholic beverage permit, e-cigarettes inspection report, wine-only package store permit, IRR tax ID, Railroad Commission Alternative Energy Division Company license. It might be for a, electric vehicles, City of Alvin fire inspection report, invoice pest control demonstration that they're controlling their pests, City of Alvin certificate of occupancy. And a description here, you know, of the nature of the sales tax. It's 8.25, that's set by the state. And the state collects 6.25, 1.5% in this particular situation goes to the city, 0.5% to Brazoria County. What does the city do with it? And again, you know, you follow the appropriate links and whatnot, you know, you can figure this stuff out. It's all available. 1% allocated to the sales tax fund. For all the equipment materials used to construct and maintain streets, drainage, sidewalks, blah, blah, blah. 0.5% allocated to the general fund and used for the city's general operating purposes. And again, whenever you see general fund, there's a little bit of flexibility there. 0.5% goes to Brazoria County. We're not going to deal too much with Brazoria County right here. Now, again, very quickly, I'm going to try to do this within 10 minutes. You've seen this probably, or maybe you've just seen it out of the corner of your eye and not really paid much attention to it. This is what is the sticker, and I just found out these cost $1. Texas Department of Licensing and Regulations. These are the people that make sure that if you get 10 gallons of gas, you got 10 gallons of gas. Not anything less, not anything more. You're not going to complain if you get more, but the seller certainly will. Each gallon of motor fuel sold, excluding off-road fuel, includes the following taxes. Now, notice these are per gallon taxes. It's not like a sales tax that goes up and down by the value of what you're purchasing. This is by the amount. All right, so per gallon, federal. If it's gasoline, 18.4 cents per gallon goes to the national government. 20 cents goes to the state government. 24.4% if it's diesel to the national government, 20 cents per gallon to the state government. Now it also goes to the Treasury, but what you've basically done here is made more a specific donation to the United States Highway Trust Fund and the Texas Highway Fund. A part of that goes to something called the Texas Mobility Fund, which kind of gets into things that, alternative transportation. Remember that big number we saw just a second ago related to how much you're spending? How much the state of Texas receives for highway construction, and you're like, man, that's a lot of money. Well, we're spending close to 40 cents a gallon for highway purposes. Each of us, every time we fill it up. Look at all the cars that are driving around. That's a lot of money that's pumped into it. And again, it kind of flows around too, because this goes to highway projects. I don't know if you've noticed this, but we get a lot of highway projects up and down 288, 518, all the rest of it. This is a description of the money for what happened over the last few years with the toll road in 288. And it's a fascinating story because it's mostly private, which you can do because it's a toll road. So you can actually, there is an incentive for a private person to do this. This describes what's going to be happening in Houston pretty soon. As you get up to 288, all of a sudden 45 is going to change, 59 is going to change. Everything's going to start looking different. It's going to be a crazy sight for a period of time. And this describes that. Apparently the two around Manville. In fact, actually, if you get onto 288 and you start heading south, there's all that other craziness going on because of the development in Iowa Colony. This helps explain where that money comes from. How about the Texas Workforce Commission? As I mentioned, we've got our own little continuing education workforce development place. And recently they got themselves a grant, Texas Talent Connection grant. They applied for it. They could apply for it, and they received it. And this is I think, the announcement from the governor's office, or ours. This actually takes us to our little press release associated with that. Alvin Community College received a $350,000 Texas Talent Connection grant from the office of Governor Greg Abbott to support innovative education and workforce skills training programs that lead to successful job placement, increased wages, and improved job retention. Every once in a while, we get an announcement, that we're doing X, Y, and Z, whatever it is. This is where the money comes from, one of the areas where it comes from. Now, here's from Abbott's website. The Texas Talent Connection Grant Program is funded by Wagner Pazer, I guess that's how you pronounce that, 7B federal funds, which are allocated to each state officer of the governor on July 1st of each year for grants to fund workforce training and job placement services. So it's federal funds made available to all of the states to encourage them to get into different aspects of workforce training. I mean, maybe Texas would do it on its own, but here, we're kind of ensuring that it does. On behalf of the Office of Governor Greg Abbott, the Texas Workforce Investment Council facilitates the call for applications and competitive selection process for the Texas Talent Connection Grant Program. ACC got involved in that and got some. Now, here's the act itself from 1935, I think it was, Workforce Investment Act. If you're familiar with recent history, the Inflation Reduction Act. Now, again, there's a lot of people saying one thing or another about it. Well, in a practical sense, in a concrete sense, this has led to that money coming to us. Now, you got new occupation, something, and again, just a few slides and I'll shut up. Now you got yourself a better job, you're making more money, and you do something really colossally stupid. You bought a home. And of course, there's a lot of these things that are being built all around us right now. What do you have to do when you buy a house? You have to pay property tax, which is the principal source of revenue for local governments in Texas. Let's go back to that original meme that I had, right? This is how the local governments primarily get their stuff, in addition to the little that we saw about sales taxes as well. Texas Constitution prevents the state from collecting property taxes. What is a property tax? An ad valorem tax on the value of the property. Who figures out what the value of the property is? Well, that's something that the local governments do, the counties do. Taxes levied by the governing, collected, established, and collected by the governing authority of the jurisdiction in which the property is located. Multiple jurisdictions may tax the same property. If y'all own property, you know this. Here's a little bit more detail about what it in fact actually gets into. But before we do that, if you own in Brazoria County, it's the Brazoria County Appraisal District that figures out what it's worth. And you might end up something that looks like this. This is what I deal with. And again, this is in Harris County. So it's the Harris County Appraisal District that does this. And notice this. Taxing jurisdiction, the exemptions, some of this stuff obviously blocked out. Taxable value, tax rate, which is different because these are all separate local governments. Notice Houston Community College System. And this is the amount of taxes, all paid up. Okay, thank you very much. Houston Independent School District, Harris County Flood Control District, Port of Houston Authority, Harris County Hospital District, Harris County Department of Education, Houston Community College System, City of Houston. Again, 8 separate sources of revenue. I'm sorry, 8 separate local governments, and they each had the ability to collect taxes to fund what it is that they do. And again, this is just a little description about what that is. And there was also, let me back up a little bit, homestead exemption. And this is where you would see the exemption. If you follow the news, you know that this is something that the legislature is always dealing with. Most recently, we had an amendment election. 13 amendments were approved by the voters of the state of Texas. One of them increased the homestead exemption. Homestead, where the property where you live, from $40,000 to $100,000. About 3-4 months ago, whenever that was. Now, of course, what that means is that there's less revenue for local governments, and they have to figure out other ways to try to get at that. Now, there's other things to discuss, but I think this is what I figured out was a relatively good, reasonable stopping point. Obviously, I went through a lot of different slides, just had a little bit of information that I think they all sequentially more or less work together. But the big point right here is that this is tangible stuff. All right, concrete stuff. We can talk about a lot of this stuff in the abstract, but I think that's where we lose a lot of people. But if we talk about things that are a little bit more pertinent, how it's going to impact you, how it is impacting you, like I said, FAFSA and student loans and stuff like that, and how all that stuff also appears in the graphs that provide this information in some abstract form. I think I have evidence, not data, but at least ad hoc evidence to say that this kind of brings people in. That's all I have to say. And I do have a little bit of an apology because I think sometimes you're supposed to stop and ask questions, but I wanted to kind of just lay all this stuff out and then perhaps get a little bit of feedback from you all about whether or not this seems, well, did it provide information for you all or make sense of some of this stuff? If I don't hear no, I'm going to assume the answer is yes. Okay. Okay, y'all. Well, I appreciate y'all's attention. I'm going to stop a little bit early because this is the next to last presentation. All right. I appreciate that. Okay. Y'all be good.